Welcome to the latest in our Move to Spain Virtual Roadshow webinar series. My apologies for problems we had earlier in terms of having to reschedule this. Anyway, moving on. Today we aim to give an overview of the Spanish tax system and the issues you need to address before you move to Spain, as well as an insight into the effective financial planning while living in Spain, and then looking at inheritance and retirement planning issues. I'm Nigel Ayres. I run Expat Network. I've lived in Hong Kong, Malaysia, and the US, and moved to Spain myself 2.5 years ago. And we're joined by Brett Hansen, partner at Flemings in Spain, who will be here to answer any questions and explain how things work. Before we get started, just to note that if you have any questions, please use the facility on your screen, and we will answer everything we can during the course of the webinar. Any that we miss or are unable to answer, we'll follow up with an email afterwards. If you have any questions that you want to ask after the event, just contact us at expats@expatnetwork.com. So, Brett, perhaps you could start by introducing yourself and telling us a bit about Flemings.
Sure. So, I'm a senior partner at Flemings. I've been based in Spain with Flemings for more than 20 years now. And what we do, we provide integrated tax and wealth management advice to British expatriates that are looking to move to Spain or have come to Spain. We actually have offices throughout Europe, also in France, Cyprus, Malta, Portugal, and we provide advice to British nationals moving to those countries as well.
Okay, thanks. So perhaps we could start off by looking at residency in the Spanish tax system. So perhaps you could outline when people become tax resident in Spain and the consequences of becoming tax resident.
Yeah, so there are basically three conditions to becoming a tax resident in Spain. The first condition is where someone spends more than 183 days in a tax year in Spain. So a tax year in Spain runs from the 1st of January to the 31st of December. And if you spend 183 days throughout that year in Spain, and those days don't have to be consecutive, then you would be a tax resident of Spain. The second condition, if you don't meet that requirement of 183 days, would be whereby the center of your economic interests is Spain, i.e. you have businesses in Spain or you're working in Spain, or the majority of your assets are in Spain. Then in that situation, even if you don't do 183 days in Spain, you would be regarded as a tax resident. And then the final condition is if your center of vital interest, as they term it, is in Spain. And that is whereby, for example, your spouse could be a resident of Spain, or you have children here who are in school. Even if you're spending less time than 183 days in Spain, then at that situation, Spain can regard you as a tax resident of Spain. And being a tax resident of Spain, there's a number of consequences, but the main consequence is that you're therefore liable to tax on your worldwide assets in Spain. So that means you're liable to income tax, capital gains tax, wealth tax, and Spanish inheritance tax on your worldwide assets.
Right, okay. So I was in Spain, there are income tax and VAT equivalent IVA, but how does Spanish taxes vary from what people might be used to in the UK or elsewhere?
Yeah, I think that the main thing to consider is exactly that they do vary. And so everything that you understand about the UK tax system, I think a lot of people come over and think it's a very similar situation. It's not. I mean, obviously, income tax is liable. You pay tax on the income, but you don't have the same allowances that you have in the UK. There's something called wealth tax, which is a tax that we're not used to in the UK. And you also, it's a case that certain assets or investments which could be tax-free in the UK are liable to tax in Spain.
Right, okay. And are taxes generally higher or lower than the UK?
Yeah, it's a good question. It really does depend on your asset base and income. So for people with quite low income, there isn't much difference between the tax in the UK and Spain. But whereby if you've got quite a lot of assets because of something called wealth tax, then it could be that the tax in Spain is more. What I would say, though, is that for the majority of our clients at Flemings Franks, we're able to structure our clients so they pay very little tax legitimately. And in fact, for many of our clients, they pay less tax in Spain than what they would do if they were living in the UK.
Right, okay. And so this webinar is talking to a lot of people who are planning their move to Spain. Are there things which they need to think about before they leave the UK, or can they just simply, get here and then sort it all out?
I would say that if you are interested in moving to Spain, it's definitely worth looking at the tax situation in Spain sooner rather than later, and also looking to see what should be done before you leave. It's very frustrating, I think, for people when they arrive in Spain and, for example, they want to sell their UK property or take their pension cash lump sum from their pension, only to find out that these things, which could have been tax-free as a UK tax resident, are actually liable to tax in Spain. So it definitely makes sense to look at what should be done before you move to Spain. And I would say you need to speak to someone who is regulated and qualified for Spain and understand the Spanish tax system. If you went to a UK advisor in the UK, then they're not going to understand what the tax situation is in Spain. Whilst they could say, well, look, you can do this on a UK perspective, but they're not. But there could be implications of that for when you become a Spanish tax resident. So it's definitely worth speaking to cross-border tax specialists that can look at the Spanish situation and the UK situation whilst you're still in the UK, but where you are going to move to Spain in the next 18 months. Or if, for example, you're based currently in the Middle East and you are looking to move to Spain.
Right, okay. I've got a question coming here. Can I live in Spain but remain a UK resident under the double tax treaty?
Yeah, so if you are spending more than 183 days in Spain, then you are going to be a Spanish tax resident and therefore liable to tax on your worldwide assets in Spain. From time to time, I do get this question, and quite often the person that's kind of asked the question says, but isn't there a double taxation treaty? Does that not mean we can choose where to pay the tax? And that's not the case. The double taxation treaty is only used for people that meet the residency or tax residency rules for both the UK and Spain. So then the double taxation treaty will outline where that person should pay the tax. But you cannot, if you're, say, a UK national, you may keep your UK property, you may have pensions in the UK, but if you become a tax resident of Spain, or if you spend more than 183 days in a tax year in Spain, so between the 1st of January and the 31st December, then you are liable to tax on your worldwide assets in Spain. You can't choose to elect to pay tax in the UK.
Okay, and another question here. I'm moving to Spain. When do I start paying tax in Spain?
Yeah, so that will depend on when you move to Spain. So if you move to Spain in, say, March, so as I said, the tax year in Spain runs from the 1st of January to the 31st December. So if you move to Spain in March or April or May or even June, and you therefore do 183 days before the end of the year, there is that time to do that, then you will become a tax resident from Spain, of Spain from the 1st of January of that year. If you move to Spain in the second half of the year or the last quarter of the year, then clearly you can't do 183 days. And so you would normally become tax resident from the 1st of January the following year. It's quite important to get this right, because if, for example, you sold your UK property as your main residence in the UK in January, but you moved to Spain in February or March, because you are tax resident from the beginning of that year, then in theory, the sale of that property could be liable to capital gains tax in Spain. So it's very important that you get your timings right and that you do things in the right order. Otherwise, you could find that you are presented with a tax bill, and an unnecessary and quite a high tax bill.
Okay, and then if, say, you're tax resident this year, the tax is payable the following at some stage of the following year, is it not?
That's correct. So when you do tax returns here, you do what's called a personal income tax return in May/June each year for the previous year.
Right. Okay. So moving on to investment and savings. Do UK investments remain liable to tax in the UK?
Yeah, they are liable to tax in Spain in most situations. So as I said, once you become a resident of Spain or tax resident of Spain, you're liable to tax on your worldwide assets in Spain. So if you have bank accounts in the UK that's earning interest, that interest will be liable to tax in Spain. If you've got investments that's generating dividends or income, that's going to be liable to tax in Spain.
Okay. And how do you stop the sort of natural tax being deducted in the UK?
Yeah, there's certain forms that will need to be completed. And what you would do, you would use a gestor in Spain, which is like an accountant, to sort out so that you no longer pay the tax in both countries. So that double taxation treaty does state that you don't pay the tax twice, but it does deduce where you should pay that tax. And in most situations, if you're a tax resident of Spain, then you'll no longer pay tax in the UK, but you would pay the tax in Spain.
Okay. And is there anything that can be done to minimise the income tax on investments and pensions?
Yeah, there are. There are structures that are like you have ISAs, which are recognised in the UK as tax efficient. So there are structures which are recognised in Spain. Doesn't mean the money has to be in Spain, but there are structures that can minimise income tax, capital gains tax, and there's certain things that can be done also with pensions that can be restructured to minimise the tax liabilities on those in Spain as well.
Right. And can you perhaps explain how the wealth tax works in Spain, which is people will be much less familiar with? How much do you have to have before it impacts people?
Yeah. So wealth tax is, it is strange to us British who've lived in the UK because we don't have such a wealth tax, or we don't have a wealth tax at the moment. That could change in the future in the UK. But in effect, what Spain does is that they look at your worldwide wealth as at the 31st of December of each year, and they tax that. So it doesn't mean those assets may not be producing income, they may not be growing, but they just tax you on your worldwide, or the value of your worldwide assets. Now there are allowances, and you have in Spain a situation where you have state allowances, which is across the country, but each region of Spain, each autonomous region has their own variations. The state allowances are 300,000 euros per person for a main residence. So if you've got a property in Spain, you're a married couple, you've got an allowance there between the two of you of 600,000 euros. And then you have a further allowance of 700,000 euros each. So typically, you've got allowances of 2 million euros before you pay wealth tax. And wealth tax starts at around 0.2 to 0.25% of the value of your assets after those allowances. But different regions do have variations, and certain regions have lower allowances. But that's the kind of the approximations.
And again, is there anything people can do to minimise that wealth tax?
Yeah, there are again structures that can help minimise those tax liabilities. I mean, what you really need to do is sit down with someone who can specialise in and look at what your wealth tax liabilities would be. There are certain conditions which can minimize it because of the amount of income you have. So you need someone to look at that as well. Make sure that you're utilizing all your allowances. And then there's structures which can then reduce those tax liabilities further.
Okay. So perhaps we can move on to pensions. In the UK, you can take a 25% lump sum tax-free. What happens if that's taken by people once they become a Spanish resident?
Yeah, in that situation, then it is liable to income tax in Spain. So if you're over 55 years of age and you have a pension fund and you want to take out the 25% pension cash lump sum tax-free, then I would advise that you do that before you move to Spain. You do that whilst you're still a UK tax resident. Of course, not everyone wants to take the pension cash lump sum because once you've got that, it's sitting in a bank account, it may not be earning you anything in a way. So I'm not suggesting that everyone goes and takes their 25%. You need specialist advice on that. But if you do want to take that out whilst UK tax resident.
Yeah. Okay. And QROPs, we hear much about qualified recognised overseas pension scheme. Could you explain what that is and how it works?
Yeah. So when you've got a UK pension, there's a few things you need to bear in mind. So any income that you take from that will be liable to tax in Spain. That is going to be in sterling. So, you're living in Euroland, you are spending euros. Whenever you hold money in a different currency to what you're spending, there's a currency risk. It also is liable to wealth tax in Spain, UK pensions, since the UK is no longer part of Europe. And the difficulty at the moment is that under the Brexit terms, the free movement of goods and services came to an end, which services also includes financial advice. And so you do actually have a situation now where you've got many British expatriates living in Spain who have got UK pensions, retained their UK pensions, and are unable to get qualified advice on that. So what we're finding is a lot of British expatriates have transferred their UK pensions into an EU pension or a QROPS. And those pensions avoid the wealth tax. You can have the pension fund in sterling or euros, so you can convert some or all of the money to euros at some point. You can receive a euro income, and you can then get qualified ongoing advice from an EU-regulated advisor.
Right. So I've got a question here. How can I take a euro income from their UK pension,
Yeah, I mean, that's very difficult. I mean, the only way really at the moment from most UK pensions is that they transfer the money into a Spanish bank account and you can get that converted. But of course, the underlying assets are remaining in sterling. And as I said, there's always a currency risk. So for people that are looking for a euro income or want to lock into what they feel is a good exchange rate, a good euro exchange rate, then the QROPS, or Qualified Recognised Overseas Pension Scheme, may be the way forward. So that's whereby they're transferring the pension out of the UK into an EU pension, converting that money into euros, and then you don't have to worry about exchange rates anymore.
Right, okay. I've got questions from two people here, but they're perhaps linked. One is, what about retirees? How does the tax system affect your state and private pensions? And then another, which is, will my civil service pension be taxed at source in the UK or taxed in Spain?
Okay, so let's cover the civil service. So, as I said, once you're a resident of Spain, or tax resident, you're liable to tax on your worldwide assets in Spain. But there are a few, not many, but a few exceptions. And one of those is a civil service pension. So if you've got a civil service pension, a UK civil service pension, then that will remain liable to tax in the UK. Just that. So if you're living in Spain and you've got other assets and other income, that will be liable to tax in Spain. But the civil service pension will remain liable to tax in the UK. You will have your UK personal allowance to offset that against. And that pension will not be liable to tax in Spain. With regards to the question before that about pension income, so let's say it's not a civil service pension, then it's a fund value or a final salary, then that income will be liable to tax in Spain. There is a personal allowance in Spain that starts at 5,550 euros, but it does increase with age. But I'm afraid it's not as good as the personal allowance in the UK. And you would typically declare that income on your tax return each May, June for the previous tax year and pay the tax that's due on that in Spain.
Right, okay. Another one here, I will be working in Spain for a UK company, paying into my UK bank account. I will have to open a Spanish bank account to transfer my monthly salary. I'm an Irish citizen, so I will also have to pay Spanish tax on the monthly salary I transfer into my Spanish bank account. If so, how much extra tax on my income as I would have paid on my salary in the UK? Is that something you can answer now, or would you prefer to?
I would need to speak to the individual a bit more to understand their situation. But it wouldn't be a case they would pay the tax twice. So it could be that, for example, Spain says, right, okay, well, look, we want this amount. You've already paid this amount. We'll ask for the difference. That could happen. Or it could be that they say, well, look, you shouldn't be paying tax on that in the UK if you're living in Spain. It's just liable to tax in Spain. But I would need to understand the amount of income, whether any of that work would be carried out in the UK, or so I would need to know more information about that individual situation to be able to give them a full and correct answer to that question.
Okay, well, the questions come from Hugh, and Hugh, if you want to sort of get a response from Brett to talk about that directly, please just contact us at expats@expatnetwork.com. Okay, so then moving on perhaps to property. Currently, my UK property is my main residence in the UK. And not liable to tax if selling. What would happen if I sold it as a Spanish tax resident?
It's a good question, and it's the answer. I mean, everyone needs to know this in this situation, because they're quite right. If the UK property is your main residence in the UK, then it's not liable to capital gains tax in the UK. But if you move to Spain and then choose to sell it, then it will be liable to capital gains tax in Spain, and it's the gain on for the full time that you've owned the property, not the gain since you've moved to Spain. So we do come across people, and in fact, my parents moved out to Spain around 15 years ago, and they wanted to keep the UK property. My mother felt kind of at ease or comfortable moving to Spain, knowing that if it didn't work out, that they had the property back in the UK. But it did work out for them. They're still here. But after a couple of years, they did sell the property and they had to pay capital gains tax in Spain on that property. I mean, obviously I told them that and they were prepared to do that. If you're not, then you've got a number of options. You would sell the property before you move to Spain. So therefore, you have no capital gains tax. If you feel that you want to keep a property presence in the UK, then you could still sell the property and buy another property, but you're then restarting the gain. You've sold the property, you've made a gain, you buy another property at that new value. If you then move to Spain in a few years' time, decide to sell that property, you've only got the gain from the date that you bought that new property. But if there is a substantial gain on a property, because it's your main residence, it's been your main residence for 20, 30 years in the UK, just be aware that if you ever sold that property as a Spanish tax resident, then it's going to give rise to capital gains tax in Spain. Of course, if you don't ever sell that property, then there's no capital gain, though the value of that property will be liable to what we spoke about earlier, wealth tax.
Right, okay. And then if people have a UK property and they rent it out, where will they pay rent, the income on that rent? Sorry, tax on that rent?
Yeah, so that's one of the other exceptions. So when I said about once you're a resident of Spain, you're liable to tax on your worldwide assets in Spain. Civil service pensions or local authority pensions remain taxable in the UK, as do rental income in the UK. So again, if you've got rental income in the UK, you have your personal allowance to offset that, and you'd pay tax on that in the UK. In Spain, what they would do, they would say, right, okay, well, look, we'll also tax you on that income. Up to 60% of that income isn't taxable if that rental income is from a long let. And then also they will offset any tax that you have paid in the UK. So you don't pay the tax twice, but it could be that Spain asks for a little bit more. But because of the 60% reduction and everything, it's very unlikely that you'd pay much tax in Spain on that income. So just bear in mind that that income would remain liable to tax in the UK, but you'd have your UK allowance.
Okay, thank you. So just answering the question there. So I've got another question here. Can I retain my UK bank account?
That was an easier question to answer before Brexit. So before Brexit, yeah, no problem at all. You can retain your bank accounts in the UK. Just bear in mind that if you are earning any interest on those accounts, which I know in recent years, that's very unlikely, that would be liable to tax in Spain. But things have changed since Brexit because of the financial services, because of the fact that you can't provide advice across Europe, that you have a situation where a number of UK banks have said that they aren't able to retain EU resident clients. So you would need to speak to your individual bank and their principle and policy on this. Right,
okay. And what about ISAs? ISAs obviously are tax favoured in the UK. What happens in Spain?
Yeah, so you can retain them, but you can't add to them. And they are liable, though, to tax in Spain. Spain doesn't recognise them as being tax-free, tax-efficient. So probably the best thing to do is to encash those whilst UK tax resident, because then there's no tax payable on those, and to restructure those when you move to Spain. If you wait, if they're in equity ISAs, and there's some gains there, you wait until you move to Spain and you encash those, they're going to give rise to tax in Spain.
Okay. One more, is it true that you can withdraw 5% of the original capital from an offshore bond and it is tax-free?
Okay, I think I know where this question is coming from, because in the past, what some UK advisors would do is that when they find out that their clients are moving abroad, they would typically put them in an offshore bond, Isle of Man, Guernsey, Jersey, and in those situations, if you're a UK tax resident, you can take out 5% per annum without an immediate tax liability, in effect, for 20 years. In effect, you're taking your capital back. But what those UK advisors weren't aware of was the tax implications of the country that the person was moving to. So if you were living in Spain, taking out that 5% would be taxable in Spain. So I would say offshore bonds, the Isle of Man, Guernsey and Jersey, you would want to stay away from those. You would want to, if you're going to put your money in something which is tax efficient for Spain, then it would be something which is Spanish tax compliant, meets certain conditions, and then those structures would offer you tax favorable income. And so I would say stay away from the offshore bonds, the Isle of Man, Guernsey and Jersey. Make sure that you're getting qualified regulated advice in Spain, so from someone who knows the Spanish tax system and can set up the appropriate structures.
Right. Okay. There's somebody here asking here about what about the overseas asset declaration I hear about? When does this need to be completed? And is this the same as the wealth tax return?
Yeah, so the overseas asset declaration, which is known as the Modelo 720, came in Spain in 2013 for 2012. And it's proven to be quite controversial because in effect, it was asking anyone who was living in Spain to document their worldwide assets. Actually, nowadays, because of reporting across Europe, Spain and France and etc., know what assets you got anyway. If you've got bank accounts in the UK and you've got a Spanish address, that information is passed automatically to the Spanish tax authorities. But that wasn't the case back then. But the real kind of controversy was the fines and penalties to this Modelo 720. In fact, the EU have turned around and said, look, the fines and penalties are distortionate, and as a result, Spain have reduced those. But in effect, if you've got assets which are outside of Spain, above a certain amount, then you need to complete this, what's called this overseas asset declaration, this Modelo 720. Doesn't necessarily mean you need to complete it each year. You certainly need to complete it the first year that you are tax resident in Spain. And you would typically do that between January and March of a year for the previous year. So if you were a tax resident of Spain for the first time in 2021, then you would complete this form before the end of March of this year, detailing the assets that you have outside of Spain as of the 31st of December of last year. But it isn't a wealth tax declaration. It's just stating what wealth you have outside of Spain. Wealth tax is calculated via a different document. It's literally just reporting where your assets are.
Right, okay. So moving on then to inheritance issues. The Spanish succession laws, firstly, how do they work? Are you as free to sort of leave your money to or your assets and so on to everybody that you want, or are there rules different here?
Yeah, this is very important. As I said earlier, when you have a British national, say, moving from the UK to Spain, it's quite natural to think that the rules are pretty much the same as what they would be in the UK. Why would they be different? But they are, and Spanish succession laws and Spanish succession taxes is one area which is quite different. In Spain, there is the Spanish Civil Code, which actually outlines specifically who's to benefit from your assets when you die. And actually, under the Spanish Civil Code, assets don't automatically pass to husband and wife, and vice versa. Actually, around 2/3 of your assets pass to the children. Because there are different rules in different countries, the EU actually brought in a regulation in 2014 called Brussels 4, which said that if you elect the law of your home country, then those rules will apply. So if you are a British national and you're living in Spain, if you do a Spanish will stating you would like the law of your nationality, a UK law, to apply, then the Spain will look at the will, see who you want to leave your assets to, so for example to your wife and then to children, and they will follow that. But that doesn't get round Spanish succession taxes. Okay, so that gets around the Spanish succession laws. So in effect, you come to live in Spain, on your death, your assets pass to who you want. They don't follow the Spanish Civil Code. But Spain will tax you on those assets, or your the beneficiaries of those assets, in two situations. One is the asset physically in Spain. So if an asset is physically in Spain, then there's a very good chance the Spanish succession tax will be applicable on your death. Or two is the recipient a resident of Spain. So if you've got a married couple with children living, say, in the UK, on the death of one of that married couple, the assets can pass to each other because you've done a Spanish will saying you'd like the law of your home country to apply, but there could be Spanish inheritance tax payable, which is quite unique to UK nationals because we're familiar with the UK inheritance tax rules, whereby there isn't a liability between husband and wife. A couple of things to bear in mind. There are allowances in Spain before you pay this tax, and those allowances depend on which region of Spain that you live in. But the tax rates start at around 7.5%, but can actually be as high as 82%, because of what they look at is the wealth of the person, the recipient, whoever's inheriting. They look at their wealth. They look at the relationship between the person who has died and the person who's receiving the assets. So children, the tax liability is less than for, say, friends, assets being passed to friends. So yeah, you've got these kind of conditions which affect the amount of tax that will be payable. So again, it would be worth, before you move into Spain, just looking at the rules there and the taxes and see what can be done to minimize those.
Okay, thanks, Brett. So what are the allowances, and how does the tax differ from the UK?
Okay, so yeah, the allowances, again, it depends on the region that you live in. And so you have what's called the state allowances. So Spain as a whole say, look, you have these allowances. But then each region can say, oh, well, look, we're going to give you an additional allowance for this or that. So I'll take one example. I live in Javier in Spain, which is on the Costa Blanca. That's part of the Valencia region. When it comes to liability between husband and wife, you have a €100,000 allowance. You have 150,000 allowance on the main property in Spain. And then whatever the tax is, it's reduced by 50%. If you live in the Andalusia region, they changed their rules recently, where I believe between married couples, there's a 99% reduction. So you've got to look at each region as to the allowances and the tax rates.
Okay. One other question I got in here. If the person who wants to buy a property in Spain, do they need to make a Spanish will or not?
You don't have to make a Spanish will, but I would advise that you do. Whenever you own assets, you should always have a will for the country that those assets are in. So if you are a British national and you're living in the UK and you've got a property in Spain which is a holiday home, then you should do a Spanish will dealing with that Spanish asset. And that will keep things simple on your demise. There's no translation of wills needed. It doesn't need to be apostilled. So yeah, likewise, if you've got assets in France or Germany, you should always do a will for each country that you hold assets in.
Okay, well, there aren't any further questions coming up, so thanks, Brett. I think we'll end it there. Just to finish off by thanking you all for listening, and we're here to help, and obviously Brett is there to answer any questions you may have. So if you do have any questions, please feel free to contact us at expatnetwork.com, and obviously those of you who are watching the recording, which we'll be putting out after this is finished, you will also need to put any questions through expats@expatnetwork.com. So thank you all for joining us. Good luck with your move to Spain, and thank you, Brett. Cheers.
Thank you. Bye now.
Cheers.